Hey guys, welcome back to the channel. In this video, I'm going to share with you a strategy you can use if you aren't sure when is a good time to buy stocks. As always, don't forget to smash that like button if you like this type of content so the algorithm gods know that I'm here, and hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. Before I get started, you know I have to hit you with this quick disclaimer to appease those YouTube gods. This video is for entertainment purposes only, not financial advice. You should always consult a professional. All right, with that out of the way, guys, let's get into the video. All right, so I get a lot of comments and a lot of questions from you guys, the audience, and I appreciate every single one. Whether I'm talking to you in the Discord community, or I'm interacting with you in the comments section, or I'm talking to you either over a Zoom call or Google Meets, I get a wide range of questions. But there's a lot of common questions I get, and these are some of them, right? Is now a good time to buy stocks? Or the S&P 500 just hit new highs. Should we wait to buy? Or how should I invest when everything is up? Or I want to open a new position, but should I use all of my cash or just a little bit? Right? When we start asking these questions, we usually get into paralysis by analysis, right? We see that the stock market is at all-time highs. We're not sure if we want to buy now because, again, tomorrow it could dip, and it could dip pretty bad. Now, I don't have a crystal ball. I can't predict what the stock is going to do in the next minute, in the next hour, the next day, or even in the next week, all right? I cannot predict with 100% accuracy. So what I offer up instead is a way to manage this, right? Is a cash management system, and this is it. So this is nothing new. I just call it a capital deployment management system. You can call it whatever you want, all right? But it has some very common strategies, okay? I'm talking to everybody here, all right? I know I have some investors who've been around the block probably 100 times, but I also have some newer investors. So this video is more so for you guys. But you can look at a dollar cost averaging strategy, all right? And basically what this is a set amount that you want to deploy week over week or day by day, regardless of the share price. This is important, all right? Regardless of the share price. This is what's going to be, consistent, and this is what's going to take a lot of discipline, because you're basically agreeing to deploy some cash every single day or every single week, right? And this is flexible. These are my rule sets. I change them, I don't follow them to the T, but this is just the way I look at things. Okay, so my own personal rule set is I will pick up at least $500 to $1,000 every single week, worth of shares, or at least $250 a day. Now, do I follow this, to the T every single week, week over week? No, I don't. But at least it gives me a guideline, right? It gives me some bumper rails that I can work off of. So if, throughout the day, throughout the week, I can't find any buys, well, if there's an ETF that I like or a stock that I like and I'm already investing into it, then, I can at least dump a little bit of money in there, right? I don't have to go in heavy. There's also the lump sum investing strategy, okay? This is when an investor takes a larger amount than your standard DCA, where you deploy a larger amount during a correction or a drawdown or a pullback. Okay, think Liberation Day 1.0, think Liberation Day 2.0, or think like bad earnings reports where the stock will dive 5 to 10%. My rule set is that I will lump sum invest if I see a 5 to 10% drawdown on my favorite stocks and ETFs. All right. If I already own the stock or ETF, then this is a no-brainer, right? If I'm looking to open a new position, well, this is even perfect, right? I can actually implement a dollar cost averaging strategy or a lump sum investing strategy. Depends on what it is, right? So if I'm investing and I see that the stock is, going to new highs, something like a Robinhood, it's just reaching new highs every other day, or Palantir or Nvidia. Well, if I wanted to start a new position in it, I don't have to go in heavy, right? I don't have to lump sum invest. Instead, I could just take a dollar cost averaging approach where I just deploy a little bit of money here and there, right? And then if I see a 5 to 10% drawdown, correction, or a pullback, then I can lump sum a larger amount in there. All right. I can lump sum, a couple $1,000 or a couple $100, whatever it is for you. Okay. So again, these are the two strategies that you can use to either open new positions or add to your existing positions. Now, we have the third option. Sometimes it's best to just wait. Sometimes we're in this moment where we don't know what's going to happen, right? There's no opportunities that we can see or that I can find personally, right? I don't know if there's, like all my stocks, all my ETFs, they're reaching new highs. Everything is doing good. There's really no opportunities. I don't want to do a dollar cost averaging strategy at this point because, I think that there's potential for a pullback, right? There's too much froth in the market. There's too much exuberance, too much euphoria. So maybe I just want to stockpile some cash and wait for that rainy day to happen. News sentiment is undecidedly positive or negative, right? We don't know. People are waiting for news to drop, to see how it will affect the economy, thereby affecting the stock market. So, sometimes I like to just take a wait and see approach. And that is what this is. You're just taking a wait and see approach. And the market usually rewards those who are patient. If you guys have been following this channel, you guys know that I had a huge position in SGov and I was waiting for Liberation Day 2.0 to happen on August 1st. And by a stroke of luck, August 1st did not disappoint. We had a huge dip. A lot of my favorite stocks and ETFs went on sale. And I basically had this huge cash pile sitting in treasuries. And I went out and bought a bunch of these shares on the cheap. So again, and I even started a new position in MSTW and in Robinhood or HOOW from Roundhill. So again, you can stockpile cash, right? If you're unsure of what's going to happen or there's some uncertainty ahead, you could do lump sum investing if you see an opportunity to invest in your favorite stock or ETF, or if you want to open a new position and you see that there's a huge drawdown. Or you can do a dollar cost averaging strategy where you're just constantly putting money into the portfolio, spreading it around. Maybe one week, this ETF gets it, another week, this stock gets it, whatever your system is, right? Again, you guys should set up your own rule sets, try to stick to it. All right. But be flexible as well. You don't have to follow it to the T because things change in the stock market every single day. All right. So let me give you guys now that I gave you guys the theory, let me show what it is in practice. Okay. So let me get out of these slides. Okay. So we're going to hop over to Robinhood. Okay. So as you guys can see, PLTW here and NVDW, they're pretty frothy. They're my best performers in this portfolio by far. Robinhood is up 10%, right? So I know PLTW for me is my largest position in this portfolio. Okay, by far it's my largest position. So I don't even want to add to it, even though it had a pretty bad drawdown of close to 5%. Right now, in my opinion, if I had a smaller position, I would open a position or add to this position because of this 5% drawdown. But because I'm overweight, I'm not adding to it anymore. But that's just a personal choice, okay? Again, you can be flexible. How about for HOOW? If we look here, this is one position I do want to add to, okay? And we can see that it had a pretty bad dip this week, 7.33%. This would have been a great time to add in, but I didn't. I did not add any money. I'm still kind of in this wait and see approach. So I'm stockpiling cash. But if I was going to start a new position or if I wanted to add to this position, this would have been a prime opportunity to do a lump sum invest in this moment. Okay. So let's look at another one, right? DCA approach, but we're going to automate it. All right. We're going to automate this DCA approach. I put, I believe it's like $100 into IBIT every single day. So if we look at my recurring buys, yep, $100. So I put $100 into IBIT every single day, regardless of share price. So this is a Bitcoin spot price ETF. And again, if we look at Bitcoin, it's at all-time highs. I don't know when is going to be a good time to buy. I don't have a crystal ball, and this thing fluctuates like crazy. So because it's crypto and because it's Bitcoin, maybe a 5% drop is not a big deal to lump sum invest. Maybe that's your DCA. But if I saw a drawdown of Bitcoin of at least 10, 15, or 20%, then I would lump sum invest into Bitcoin. At least I would. I'm not saying that's what you should do, not financial advice. All right, we see the QQQ, right? This is at all-time highs as well, and this is breaking new records almost every other day. So when is a good time to buy? All right, that is a great question. This is when you have to implement that DCA strategy or that lump sum investing strategy. All right, same thing for the S&P 500, reaching new highs. And there's some talk on the street, talk by financial pundits and, throughout the, finance investing community that, we could probably see the S&P 500 reaching 6,700 by the year's end. All right, which is a strong possibility, right? We still have a couple months left, but again, it's reaching new all-time highs. So when should we buy? And this is when you can implement that DCA strategy or that lump sum investing strategy. If you're hearing some rumbling in the news, we might have like another liberation day, maybe there's tariffs coming up or something, then that is when you want to stockpile cash and maybe, calm down on the DCA, right? Calm down on the DCA, wait for an opportunity to present itself, and then you can lump sum invest, right? There's 100 different ways you can use those three strategies in combination. All right. So this is, again, just my own take on how I approach investing into these ETFs or how I approach investing in general, especially when there's no, opportunities out there. So I hope this video has been educational, valuable, and informative for you guys. Let me know down below in the comments, are you using any of these strategies? Do you implement them for yourselves? Or is this all new to you? I would really like to know. If you guys have any other questions, please put them down below in the comment section. I love reading all of your comments. I read every single one and I try to reply to as many as I can. So with that being said, you guys have a wonderful day. I will see you in the next video. Take care.